A major concern about electric vehicle brands is not entirely about the car's speed or design, but for most people, especially the investors, they worry about the stocks and if they're worth investing into. In light of this, NIO has made a huge impression by partnering with one of the world's biggest leasing companies, Leaseplan. In this video, we will see NIO's newest partnerships and the value of the stocks. Leaseplan and the NIO partnership. The leading Chinese car company NIO thought it would be wise to partner with Leaseplan to promote the expansion of their brand in Germany, Denmark, Sweden and the Netherlands. This announcement was made in Amsterdam, where NIO successfully launched its partnerships with one of the world's leading car-as-a-service companies, Leaseplan. The partnership aims to boost the flagship ES8 SUV, making it available to all customers. It was also mentioned that Leaseplan will be offering NIO's entire range of next-generation EVs, including the forthcoming ET5 and EL7. It seems that the company has good plans and strategies to keep expanding, and this collaboration is proof that they have indeed come into the European market not to stay, but to dominate. But like they say, it's not about how far but how well. So, do you think NIO has got what it takes? Although the CEO of Leaseplan seems to believe that NIO is a major force in the European electric vehicle market, when he said, NIO's next generation tech, including battery swapping, has eliminated range anxieties for drivers, making it possible for everyone to make the switch. And following the positive remarks, William Lee, the CEO of NIO, stated that buying an EV is a big decision. Today, more and more drivers would go with the option of a car subscription, and we will go with this trend together with Leaseplan, exploring the EV market in Europe. Is the NIO and Leaseplan partnership good for stocks? With the new collaboration between Leaseplan and NIO, it is easy for car enthusiasts and investors to search for its stock value. So, is NIO the new Tesla, as many believe it to be? Is it worth buying the stocks from them? Or would you advise someone to look elsewhere when investing? Well, we are here to find out. First, before you invest in NIO or run away from them, you should know that the company did not suffer as much as Wall Street analysts expected. During the second quarter of 2020, NIO lost only 16 cents per American share instead of the 26 cents per share investors expected. In the same year, NIO's revenues reached $526.4 million, beating the estimated $504 million. So, these stats and reports show that NIO stock does not have a risk factor as most see it to be. Now, let's see how the Tesla of China partner with Leaseplan and why it might be a wise decision to invest in NIO stocks. One very striking advantage NIO has over other brands is its increased deliverables. NIO has delivered more than 10,331 vehicles last year, which recorded a 191% increase higher than other years. The company believes that the current constraints on production will be lifted soon, with the production capacity meeting the accelerated demands for car models. Improved cash flow is another reason why you should probably invest in NIO stocks. In early 2020, NIO fell into cash flow problems, causing them to pay their workers 6 days late. However, the situation has improved, and at the end of the year, the company recorded more than $1.6 billion in cash and equivalents. NIO has also had a positive third quarter outlook, where they have delivered over 15,000 vehicles with a total revenue of $572.9 and $596.2 million. This shows a huge improvement from where the company was just a year ago. Although the future of NIO in Europe and other continents seems promising, on the flip side, it also has some disadvantages. Firstly, NIO shares are largely overvalued. The company's stock has gone up more than 322% compared to previous years, which is more expensive by traditional valuation metrics. Secondly, the company isn't quite profitable, despite their outstanding records of growth and success. Although, with this partnership with Leaseplan, there's a chance that it will become profitable in years to come, and for now, it isn't. Another glaring disadvantage is that the company's momentum might not last. There are concerns about whether NIO can sustain its momentum and stay relevant within the European market. Still, despite analysts' claims that the company will go bankrupt, it's encouraging to see NIO's growth so far. This report shows that NIO is in a good financial position, with daily rising sales and an all-time delivery high of up to 281% shares year to date. Is NIO a good stock investment? With the birth and growth of a new company comes the need of people to invest and buy stocks and shares. But the underlying concern is NIO stock a good investment? Before you think about it, let's rewind a bit to fully understand what the objective of the Chinese EV brand is all about. As you know, NIO designs, manufactures and sells smart and connected electric vehicles. Its main focus is producing autonomous driving electric vehicles integrated with the next generation technology and artificial intelligence. NIO is also focusing on providing vehicle charging solutions such as the Power Home, the Power Swap, Power Mobile and the Power Express service. And of course, the company puts its customers first by offering value-added services such as statutory and third-party liability insurance and car damage insurance. By knowing the objectives and problems NIO aims to solve, it will be easier to decide whether investing or not. According to the stats reported by Stock News, NIO recorded $58.7 billion in the market capitalization compared to the auto and truck manufacturers median of $4.01 billion. As of October 2021, NIO's ADR stock was down 27.1% and up 5% in previous months and 66% in the past year. Its trailing revenue over 12 months was $4.3 billion, with a minus 29.8% profit margin. Grading the NIO Incorporated ADR stock in terms of value, growth, and quality is an essential component to help potential investors understand the risk or benefits involved in investing in the company. In terms of value, stock in the value score from 0 to 20 are considered deep value, and those that fall between 21 and 40 are of good value. However, NIO stocks have had an overall value score of 96, which is considered ultra expensive. On the other hand, the growth factor considers a company's success in growing its sales, earnings per share, and operating cash on a year-over-year basis for the latest reported fiscal quarter on an annualized basis over the last 5 years. Here, higher rates compared to the sector median lead to better scores. Unfortunately for NIO, it has had an impressive growth rate of 66, which is very strong. A higher quality stock possesses traits associated with the upside potential and reduced downside risks. Stocks receive higher scores for having better quality and low grades for having lower quality for the subcomponents. From this factor, NIO records a low quality score of 26, which is very weak. These three key investment factors provide a holistic view into the NIO stock, and it shows that the company has had a value grade of F, a growth grade of B, and a quality grade of D. While these results indicate that NIO is not entirely a bad investment, it might also be risky to venture into. However, these depend on your goals and your risk tolerance. Can NIO dominate the EV market? So far, with daily rising sales and growth stats, NIO has been able to satisfy many of its users and put major investors' minds to rest with its market capitalization. However, NIO stock has failed to sustain momentum as investors try to gauge the impact of microeconomic concerns and ever-rising competition in NIO's home market on the EV makers' prospects. Still, there is reason to believe that NIO has what it takes to compete with Tesla and even dominate the entire EV market for years to come. One reason to believe this is that NIO has had a massive delivery growth over the past year, which is an important inflection point. Also, recent capital shows that the company is working heavily and investing in its future. Although NIO cannot boast about the growth and success compared to Tesla, the company is making a name for itself through its unique battery-as-a-service model, which is a competitive edge in gaining market share. Apart from Tesla, there is still room for other EV brands to thrive, and NIO, with its strong growth prospects, improving margins, and promising battery technology, has the potential to stay winning. And that's about it for NIO's partnership with Leaseplan and its stock value, statistics, and growth rate. Thank you for watching. Hit the like button if you enjoyed this video. Also, subscribe and make sure you turn on the notification bell to stay updated with more exciting content. And thank you again for watching.